I mean, it's a great growth story, obviously, but it's very hard to repeat that exercise the next 5 years in terms of the return on investment, or it should be very hard, right? So take us to today. You obviously are very positive, optimistic about the future, and you have, I mean, the contracts also, implies that you should be, but just explain how hard it is, this next challenge coming off for that return on investment, because you can't replicate that or copy it.
No, no, you can't. But I think in shipping in particular, it's about being very rational in your decisions. And it's not about growth. It's not all about growth. I think to have a certain size, especially if you want to be listed and want to really have a stock that is worthwhile for investors and for the company, it's important to be very clear in what to do. And in shipping, there are times when you have to grow and invest and deploy capital, and that has to be well timed. And then there's time to return capital to investors and to be also very clear and transparent about it. And at least in my book, now is the time to return capital to investors, and now is the time to really walk the talk, as we did on the strategy. We walked the talk. We said we will buy ships in that segment. We didn't deviate from that path. We bought ships at what I would say attractive prices. And now, we will return capital to investors, and we will be very selective and disciplined on growth. That doesn't mean we will not do any growth measures by buying new ships or the like, but we will be very disciplined and rational about it. And currently, clearly, the focus is on returning capital to investors. And I think that's what people can expect. And I think if people know what to expect, then, if someone enters now, they shouldn't expect overnight 20% return. They should expect a very visible and tangible path to dividends and distributions. And I would argue last year we have been the best performing stock from a growth standpoint, so appreciation and value. If you run the numbers, and I haven't compared that with everyone who's listed, but I would argue this year and going forward we will be a very strong dividend stock. So it's really time to take what is on the table, and I think now there is clear cash flows to investors on the table, a very high dividend yield, and that's what we're here for, and that's what people can expect.
Can we also just add on that argument the link between being on the spot market and having longer visibility, so people also understand that in good times you you are able to lock this up, right? You can have strong certainty about this scenario playing out, because honestly, if you just look at the market, right, and the rates, they can go up and down for weeks, right? But some companies secure their runway, sort of saying.
Absolutely, and I think that's the, let's say, transition from growth, which is by nature maybe a bit more volatile in container shipping, because you buy ships and then you need to charter them out, right? So now we look at a market. When we bought those ships, we were able to charter them out for 3-6 months maybe, and now we're in a market where we can fix ships for 3 years. So we have a visibility. We have a revenue backlog well above 1 billion, so 1.3 billion. We have an EBITDA backlog of 850 million. So we have a very, very clear path and earnings visibility going forward. And I think that has changed, and that's not just for 1 year. That's really stretching out. And we have hence a very, very certain cash flow development, and that's why we're also kind of very outspoken about the distribution plan that we have implemented. Actually, this Friday we have a EGM where we ask for authority to execute this distribution plan, and that is built on extraordinary dividends, where we return capital to investors upon a vessel sale, for example, so more one-off events, and a constant and recurring dividend of around 1 NOK per quarter that we will also pay out. So it has those two ingredients, and I think that is fundamentally based on improved visibility, good backlog, and hence also longer contract durations.
Very interesting. So if we're trying to predict for, let's say, the whole sector in containers, I know predicting is super hard and forecasting is also super hard, but there are some very interesting dynamics going on right now. We are maybe getting out of COVID soon. Supply chain has been very much disturbed by this. So just give us a bird's eye view. What are you seeing? Are there something you're very interesting to see how it will play out? Because obviously you have the inflation and price index as well, right? So there's a lot of components to be interested in right now.
No, absolutely. I mean, if you look at shipping in general, and that's obviously not just container shipping, it's actually the global economy. The whole scheme of energy transition will impact us globally and shipping in particular, of course. Undoubtedly, it will play a key role over the next 5, 10, maybe 20 years. I think for the next 2 to 3 years, it will have an impact, but not, you will not be able to replace the whole fleet within that period. So it will be a transitional process. That will be a key scheme. I think in the more 2 to 3 year horizon, especially in container shipping, I believe we will see a focus on supply chain resilience and reliability, and people actually now willing to pay up for it. Since 2009, in container shipping, people earned money, but that was more the freight forwarders, the shippers, and less the liner companies and the owners. And now with this disruptive event of COVID, which is now already 18 months down or into really disrupting the supply chains, I expect people are willing to pay up, and paying up doesn't necessarily only mean higher price. It also means longer periods and more contract durations. And that's good for the liner companies and for owners like us. And I think this is the trend that will not stop, because people have seen how vulnerable the supply chain is and the consequences of this. And by having short contracts, you would still be vulnerable. And we don't know what might happen down the road. Maybe it's not another COVID lockdown, supply chain disruptive event, but it might be something similar. And I think people have learned how important it is to have a functional supply chain and how bad it is to have a non-functional supply chain. So I think this is a scheme also in terms of strategic priorities for shippers and people who are highly reliant upon the supply chain functioning, that play a role, and that will play a role. So people will pay up for it, and that will be seen over the next 2 to 3 years in container shipping, in my book. And this is really interesting to play out. And secondly, in terms of demand and supply, because that's eventually the driver, next 12 to 18 months, there is limited supply growth. After that, we see more and more orders. Container shipping has seen significant orders last year, especially in the larger sizes, to a lesser extent in our sizes. But I would still expect a moderate demand growth of, let's say, 2 to 4%. So overall, I'm very positive for the next 2 to 3 years. And then I see energy transition really reshaping the industry in a way that might be quite dramatic over the next 5 to 15, 20 years.